All right, so it's time. Let's get started. Let's see. Today's topic is about context, and we have like 60 people registered, and there's only like 26 of us here, and that's a little disappointing. But we're going to talk about a few other things first. So maybe some of them will drift in, and if not, it will be their loss. Anyway, Jonathan had brought up something that he wanted me to address, which I will, about the optimization process. And part of this whole discussion today is going to be around a lot of things like that. So I'll introduce the topic in just a minute. So I put you guys back on my main screen, and you'll notice a lot of stuff is different, simplified. This is set up for the new boot camp and also for going forward for me, and I'll cover why that is in just a minute. That's part of the conversation that I was asked about on Slack about funks, and I said I had a good funk story that related to removing things from your point of view and removing elements in your decision process, and that kind of all went together. It's one giant topic that I've been dealing with directly for for quite a while. But certainly, things were pretty smooth for me in the early lockdown, and then when my friends started to split up, which was during the lockdown because they moved in together during the lockdown, I told those of you that were around, this was an 80-year-old and a 70-year-old friend of mine, a couple, a man and a woman that are both friends, and I do business with the man too, so separately, and so it's a complicated relationship to start with, and then suddenly I was in the middle of helping them separate and then get back together. Anyway, they just got back together in New York, so but that was that's the kind of stuff too. So anyway, well, let's put this into some compartmentalization so we can understand the topic, and then I'll give you a bunch of examples, and then I'll explain what's on my screen, and then we'll talk about context, which is what this session's all about, although the stuff I'm starting with is about context as well. So let's see. Let me just elaborate on this funk for just a second, because this is a good way to introduce this session. So what I've found is that funks, and I know we did a whole session on funks, but this is part of the context thing, because context is both internal and external. And external context is the obvious stuff, the advanced decline, the internals, the other internals, where we are in the correlations and that kind of stuff. And I'm going to go through all that and how to use that. But it's also important to understand that there's an entirely other half of that context, which is it's internal context. So if you break that into two things, context has two kind of subfamilies that it falls into. One of them is internal, and I'm going to spend a bunch of time on that right at the beginning. And then the other is external. And both of them have the ability to affect your mission. And your mission here is to take money out of the market. That's your only mission. Being right, writing code, having fun, all those other things are just peripheral. If you are not removing money from the market, then you shouldn't be in the market. And, you're paying to be here if you're not doing that. So anything that can impact that. So internal things that can impact that, and external things. Let's start with the internal things. And so here's just personal experience, which is always a useful way to explain anecdotally something, and I can give you examples along the way. So please ask questions if you have them. So as you know, if you've been around for any length of time, or if you're new, you don't know, and I'll just go ahead and repeat it for those of you that are new. I recently moved and also had this couple friend breaking up that I just mentioned, and that was down in Montecito. And I had to get both of them packed and get both of them separately to airports. One went to Pennsylvania, one went to New York. Then the one in Pennsylvania now is in New York with the one in New York. And anyway, so for the period of like May to August, I was dealing with that almost every day. I mean, there was times like we had a class, and I would, an hour before the class, I'd get a phone call, come get them out of here, and the pots and pans are getting thrown, and that kind of stuff. So it was very disruptive. And anyway, I came up here to the mountain cabin on the beach place to just kind of do what I like to do every few months and just, retune and recenter myself and meditate and go for long walks with the local deer and whatnot. And in the process of coming up here, I had stuff that we always have to do when we move. You got to move your stuff and, connecting new internet. And if you're around, I had some trouble with Spectrum and the crappy routers they have, losing my connection over and over. And anyway, and that was impacting Ninja. So, we had to change some things with Ninja, which ultimately was probably a good thing. So all of this was going on at once. And none of this directly has anything to do with the market, is my point. But it was creating a funk for me that was clear in my results. And this is important. This is an important example. There's two things that I always notice when I'm in a funk. And this is kind of like, the funk alarm goes off. Number one, my results just aren't as good. Whether it's subtle or it's significant, it's there and it's measurable. And sometimes I go into a drawdown, and I did that when I was screwing around with the problems with Ninja and transitioning to Sierra and adding all these elements on my screen. I believe in testing real time with real money, once I think I have the hang of it anyway with the sim, which I don't do for very long. And there was a couple of days, just because of stupid errors and not paying attention to settings that I was new to and whatnot, where I lost $300-400 for a couple of days in a row. And that's really unusual for me. And I was like, all right, well, I'm investing in my R&D and I'm used to that. But again, those are the ways that I kind of say, okay, funk alarm, scale down, play micros or play sims. And then the next thing that I do is what I think will be really useful to you. And there's one other piece of that was coming up. Whenever we're doing boot camps, there's a constant teach versus do struggle, and I know Lee can identify with this too, because we have to kind of think like where we were 5 years ago to do a teach or to boot camp. To do a boot camp or to teach, because otherwise we tend to just skip over details that are really important to the students because they're blinks for us now. And, like watching price action up and down is pretty automatic to me. So anyway, that's another one, going back and forth in that teach versus do mode, which I used to find a lot easier when I was younger. Teaching on Zoom is very exhausting if you've ever done it, because you can't see the audience. You're constantly trying to understand who's getting it and who isn't, and and modulate your voice and change your tone where it's appropriate. And it takes a lot more energy than just walking around a room watching people and teaching. So that's important. But anyway, so how whenever this happens, number one, it's really important to identify it. And for me, there's two ways I do that. Number one, my metrics immediately get crappy, even if it's just for 2 days or so. I stick myself in the penalty box and I say, okay, you're either in a funk or something's happening in the market that you're not in tune to. And then the second thing is, I'm sorry, 1 second. I have to mute a phone here. Okay. And then the second thing is identifying, what's going on, and is it internal or external? Sometimes it's both. And then the solution to that is process. And here's what I mean by that, because, we say that all the time and it sometimes gets a little bit old. Well, you got to return to your process. Well, one of the questions that Jonathan was asking me was, how do I go through and figure out what I need and don't need on my screen? Because, when you're new, every shiny new toy, like I've been beating up David about here, every one of those new toys is fun and unfamiliar and it's exciting. And when it gives you an edge, you see it. And, if you can suddenly make money with that's an exciting event. And so those are just a few examples. The way to solve that problem is to return to process. And part of returning to process in this kind of a funk for me is to question all of the elements of decision making. So that's the process and what components on the screen do I need. And then in the process of doing that, I need to also think about remember a couple of sessions ago, I talked about, on Sunday and Monday, I talked about mapping every component of your screen to a function. And I put up this little thing I had sketched out in the Slack. Hang on 1 second. You probably remember what I'm talking about. But anyway, it was, Oh, come on, we're running Zoom, so it's gonna, this thing right here. And I said, this is a map of my tool and screens, and I talked about that a little bit. Well, when I did that, and this was Monday, right, and Sunday. When I did that, I realized I still had too much duplication here, particularly for the boot campers, and particularly since I had this new resource of my 38-inch screen. And so I decided to start from scratch. And so that's what I've been doing for the last few days. And I literally went through every element of my decision process, every piece of context, and I decided what I need to see and not see to make good decisions. Okay? So, so the funk alarm goes off. Yeah, that's a good term. And like I said, your metrics will do it, number one. And number two, if stuff's just not working, or if you have a lot of internal things happening, that's a pretty good sign too, because, you have to have pretty good balance in your life to trade well. If you're good at compartmentalization, you can put it aside. But, when my friends were going through those constant battles and, I was getting, come get them out of here, at 7 o'clock in the morning when I was in the middle of trading, it was costing me, one day it cost me almost 10 grand in my own account in lost opportunity and in a trade that was working that I had to shut down so I could go deal with it. And that was really frustrating. But that's all internal. And then the external stuff is all the traditional stuff that we talk about. What are the advanced decline numbers for the major indices, and what's the VIX, and is it risk on, risk off? Are we gapping up? Is there news on the calendar? And I call those external because they're external to the market. At any given second, price doesn't depend on what the advanced decline is. So it's a way of coloring your bias. And it's very important to understand what that means in the context of decision making as well, because a bias is something we try not to have, right? When we're decision making, you want to be really unbiased and clear thinking, but at the same time, when the market is doing one thing, like, just for fun, let's look at, here's 30-second bars. Okay. The market is doing what? It's going up. So to come in here and think, okay, I'm going to short, that's just naturally the wrong thing to be doing. So that's not what I'm talking about with respect to bias, but that's part of it. And so I want to cover the different shades of it. And I realize, again, it's going to be a fire hose session. You're going to get a lot of information. It's going to be up to you to assimilate and collate it and kind of purge out the items you don't need. And but at the same time, hopefully, if you can just get the different shades of meaning, that will get you the gist of this, and then you can kind of refine it into your own framework of thinking. Let's see. So a couple of questions I have up here. Let's see. So internal, you're defining as personal. Yes, I am, but it's not only personal. It's things that impact Jeff or impact Amy. So, moving to a 38-inch screen. Let me just show you one example. We're going to talk about the other items for context in a second. So let me start up Thinkorswim. I usually don't run it on this monitor anymore. I run it on my monitor on my left, which is my old 32-inch QHD. But just for fun, I moved it over here today because I wanted you guys to see the difference in real estate. I left all the proportions the same. So this layout that you're about to see, this workspace in Thinkorswim, is my total 32-inch QHD workspace. That's all of it. Okay, so here, just for fun, let me close all the other things behind it so you can see. Okay, so these that's a 32 QHD on my 38. So you can see all the different elements that would be one giant screen fit in a corner of this. And so anyway, we're going to come back to that. But that's what I'm talking about when I say that I'm referring to. These are all separate little windows. I'm going to have to minimize. So that's what I mean when I'm talking about the market related or the external to the market. And they're not me at the same time. So does that make sense, Amy? Well, you can't, you're saying things you can control, things you have the ability to change. Okay, well, as you know, I'm a Zen Buddhist Taoist. I believe that you don't have control over anything. It's be water, my friend, right? So that's not the way I would put it. What I would say is that internal things are things that affect you and don't affect the market, but could affect your ability in the way that you interact with the market. So it could be your platform, your data feed, yeah, but it's impacting you personally. Okay. And then, yeah, the friends breaking up is a good example because it's something that's going to be in my brain. And them calling is going to disturb my focus. And going to a 38-inch monitor, all of a sudden I have more space and I have to spend a reasonable amount of time understanding the right things to do with that space. And so here you're seeing exactly things. Yeah, you summed it perfectly. Things that wouldn't make the market change at all. And then the external ones, in other words, they're external to Jeff, they're external to the trade, but they can impact the market. Well, Trump would be an example of that, or a war in the Middle East, or a stimulus bill, or, when RBG died, or, whatever. Pick anything out, news-related things, whatever got us doing price discovery a second ago. Okay, so those are things that I like to call external context because they're external to order flow. They don't have anything to do with the bid and the ask right now, but they can certainly impact the trade, on a macro level very quickly, like we saw when, Trump said no stimulus and we dropped, 100 points in the S&P instantly, okay? All right, so I think you guys all get it. I think that we're all on the same page with that. So, and just again, my examples were, I was moving, I moved up here and I was here for 3 days and it was wonderful. And I walked among the deer and the turkeys and boom, then the Dolan fire breaks out 10 miles away. And all of a sudden, we're living in smoke fog hell for a month, and so that was stressful, obviously. One way you can kind of group all those things together is things that are significant change to your environment, your life, your family, your friendships, your whatever, your health. In my case, a painful day. Teaching versus doing. The days I have a class, I really have to put my brain in a different mode. It's completely different than the execution just of doing it for me. Although I'm going to share some of the process stuff because I had to do a bunch of stuff for me this week because I was really frustrated with what was going on my end. So anyway, let's go back to that. So the way to solve that is to go back to process and test your visual efficiency and remap elements on your screens. This is going back to Jonathan's question. And the default answer, which is really hard to execute in real life, but I strongly recommend it, is that if you can't define immediately and specifically, and I mean, like I just showed you in the Slack, like this. If you can't do that immediately and specifically for every element on your screen, then it needs to go away until you can do that. And so for me, I'm in this, okay, I've got this bigger screen, I've got all this other information, I'm adding Sierra chart, yada, yada, yada. So I went back and I said, okay, so what does Jeff just really do? And so this is a really good way to think about this, Jonathan, and everybody else who's new, because, simplicity is the heart of success. It really is. So I see a question I'm going to address in just a second. So literally every item, though. So we're going to go through that, and let me take this question though, because I think it's a good pause. And let's see where we are on time. 18 minutes. Okay. So when you raised this question, you mentioned, I see the internal, they do not support the in-text. Okay, that's a different, okay, here we go again. We're having one of these English issues. That's an English word. And when I talk about the internals, I am talking about this, the advanced decline and the tick for the NASDAQ and for the S&P 500. That's the word internals. That is a noun, capital I, okay? The word I'm using in this discussion of things that are internal, they're internal as in inside of me, okay? And those two things are completely separate. It's another one of these, like edge having two completely different meanings in English. So thank you for asking that, Avi, but I hope you understand the answer. They're two completely different words. So internals in the market and things internal to Jeff, like his friends fighting or a bigger screen or my neighborhood being on fire. You got it. Okay, good. All right. So I was in a funk because of those internal things to Jeff. But part of context that's external to Jeff, but that can impact the market, is stuff like the internals, the advanced decline, for example, of the market. So that's a good question. Glad you brought that up. All right, so let's go back to this simplify idea here for just a minute. So one of the things, I literally went back to basics. I said, okay, what is it that I do? And what elements on my screen are supporting what I do and what elements are not? And so I basically just took the outline you've all heard for the boot camp, and I said, all right, well, basically what I do, what Jeff does in the market is he scalps two different ways. I scalp structure and I scalp video game. And for the life of me, I've now tried with 4 different platforms. I give up. I am conceding that footprint charts are completely worthless for NQ. So I got rid of it. And the 4 screens you see on my right, the 4 windows that are not domed. So this NQ chart, this ES chart, the liquidity, whether it's ES there, or in this case, MES or whatever other instrument, I am putting this in concrete. This is the way this is always going to look. And I'm not running any footprints for NQ. I'm only running one little 1 minute. Sometimes I change this to a little bit slower or faster, but in general, I want to be able to see the structure of ES, but there is no structure in NQ that's readable anyway that way. It's too rangy. So I went back to just my good old, 15 to 30 second equivolumes, and that's all I need to scalp NQ. I don't need anything else. And as much as I tried to force fit, and if you've been watching me for the last 9 months, I tried it with 3 different versions of footprints in Ninja, and I tried it with Sierra now, and I've tried, and I just said, to heck with it. It's not worth trying to footprint NQ. It doesn't give me any better information. When I'm scalping NQ, what I really need to see is a bigger dome. So that got me thinking, and I went back and I looked at, all right, so I've got all those little, remember I had all the little 15-second views down here on the bottom, and I'll show you an image of that too, just so it's fresh in your mind, because I put that up here as well, I think, when I brought this class up. Oh, let's see, hang on 1 second. I thought I posted that too. I guess I didn't. Oh, I know where I posted it. Sorry, I'm just not paying attention. Yeah, so I posted here that I had made this change, and if you just go back just a little further back in Ninja, you could see the way it was before the last time I posted a POV. And basically, I'm talking about when I switched first to this monitor and I put all the little guys underneath there. Anyway, I don't want to go looking for it, but you guys know what I'm talking about. So, and the idea behind that was twofold. I wanted to be able to see correlation across the indexes, but I had never tried my large vertical domes like this since I got the 38-inch monitor, and I'd always meant to do that, but I just had kind of forgot about it. And one of the advantages of doing it this way is I don't have to reset the total trades at all, except, maybe in the NQ, but in ES, I don't have to do that. So I can let it show me the trade on both sides over a much longer period of time and just reset my current trades, which are the outer ones here. And you can see I'm doing that right now. So it's leaving my real-time footprints over longer periods of time because I can see a greater amount of price points. And particularly in NQ, this has become really valuable because I'm not constantly doing this and scrolling up and down. And that's saving me a lot of mental time, okay? So in the process of questioning all my assumptions, I decided that in order to see the correlation with this much vertical space, and again, I just showed you how much more it is than it was before, I could see correlation just simply by watching the instruments move away from wherever I centered them to. And since I only play gold and oil during the day for momentum, and on the overnight I play them the same way, I wanted to give myself a way to do that. So that was the only thing I was missing when I took these off here, was the ability to do that. So what I did is I said, all right, well, how many times am I trading more than 2 things at a time? And it's really important to follow me through this whole conversation because it was kind of a very big aha moment for me, and it might help you, some of you, get there too. So again, remember, I'm thinking about in terms of, okay, well, the way I scalp is either structure or video game. So I've got great structural information here now, and I can see NQ versus MNQ. I can see a lot better information for NQ, or MES versus ES rather, and I can see a lot clearer for NQ because I can see a bunch of it at once. I'm not scrolling. That thing down there was a little distracting for me, although it didn't used to be. That could be an age thing, who knows. But simple's always better, so I always default that way. So I kind of said, all right, well, let's see. I'm never trading more than 2 things at a time. So if I take 2 of my 15 seconds, these 2 in the top right, and they might be 15 to 30 seconds. The interval isn't critical. What's critical is that's where I'm seeing the bar by bar delta and the short-term range. That's what I'm doing. And then on a real volatile day, I'll make this 45 seconds, as you've seen. And on a day like today, where we're literally not going anywhere, I'll leave it at 15 seconds so I can just see, what the scalping ranges are. And the beauty of that is, these are the only 2 I'm ever looking at when I'm scalping ES, MES, or NQ. I don't pay much attention to RTY and YM when I'm doing that. Yeah, it's in the corner of my eye, but I got it right here. If there was a sudden big move in YM or RTY, I'd see it. So having the chart not be there for that I haven't lost anything. I don't trade the ranges on YM or RTY very often. If I wanted to do that, all I have to do is say, all right, I'm going to trade RTY right now. So I'll just switch that one to RTY. I'll leave this at ES, and now I can do RTY. So I thought about that, and I said, I could do the same thing with gold or oil or whatever it is that I'm trading besides the ES. Because the only time I scalp the ES or trade the ES structurally is both of those end up in the same place when there's a good structural setup. And when there isn't, I'm not trading it, but I want to watch it. So this gives me the other way to play it without having to look in a bunch of different places and compare. And then my job is just to, kind of pick out what I'm stocking at any given moment. And that goes back to the context discussion again. So in the sense of that question, so I have very simplified information for scalping now that gives me everything I need to know about at least 2 instruments, and I'll cover these bottom things here in just a second. But what I don't have is I don't understand the context of this or this, other than what I see on the dome. So I still need that left monitor over there. So let's go over that to that guy for a second. And let's talk about the kind of zoom out context. So again, this is price action we're talking about here. And this is where, if I'm playing structure, I want to know about things like, is there any UB? And so over here on the left, I've got a 20-minute footprint. Depending on the time of the day, I make it 30 minutes or I make it 15 minutes. Right now we're well into the day, so let's go ahead and make it 30. And looks okay. So we had some UB that we just took out right up here at 72.50. And other than that, it's a pretty strong up move here, right? You can see I've gotten better with my Sierra window manipulation. So, we're up here pretty strongly, although it's getting sold up here pretty aggressively too. Oh, wow, we have some price discovery again. Let me go back to my domes here just so you can see the difference. Look at this. Wow, I don't know what's happening, but obviously there's some news or rumors or whatever. Look at how sweepy this is. I mean, you just got to get out of the way when this happens. All right, anyway, I just wanted to point that out to you while it was happening. You're getting a lot of stuff today, so just fasten your seatbelts, guys. Anyway, so that's what's going on. That's the structural context. And I have decided that I really only need Sierra for footprint charts. That's really all I'm doing with it. So I made them as simple as I could. I streamlined the emoji stuff. There's a little bit of it on this one. There's a little bit of it on this one. This chart over here, I realized I wanted to be able to see the context of what I was just looking at over on the other main screen. Remember I said, the 15-second bar by bar is really great for scalping, but particularly for video game scalping, it's perfect. Or trading the open 5, it's perfect. You don't need anything else. But if you're trying to understand structure, you have to see a little history. So what I do with this one is I move it back and forth between about 3 and 5 minutes. Again, early in the session, I'll use it bit faster. And as we get into the session, I'll make it a little bit slower. So now it's going to be on 5 minutes. And again, what I'm trying to do here is context. So this is market context. This is directly related to the trade and the price. I'm trying to understand, for example, we're getting a nice double distribution up here. So how did we get up here? Was this like a big stops run? Was this news? Whatever, So I want to see this. This was some pretty aggressive buying through here. And then there's some pretty aggressive selling. So, this is what's been going on for the last 2 weeks. And, when you say, David, that you can't read the tape right now, well, guess what? None of us are reading the tape right now. It's just being really opportunistic is the right answer. So anyway, so even if you were good at reading the tape, this would be hard to read. So that's what I'm doing with these two. So again, going back to the idea of mapping and what is every screen element for, and what is the context I'm looking for in my trading, I want to see market structure on a period by period, A period, B period basis, or earlier in the session, I might look at it on 15 minutes. And why would I do that? Because, 30 minutes takes too long to develop for somebody like me that's scalping as fast as I am. So I want to see structure, but I want to see, I want to break this up into 2 bars instead of 1 so I can see that kind of rolling over action. That's all. So that's all I'm doing with that. That's all I'm doing with this. And then I looked at my Ninja stuff and I said, okay, remember when I explained this to you Sunday or Monday, this was all about finding the ledges and edges. And I thought, what if I could make this also about seeing the momentum? Remember, that was one of the things that my little 15-second screens across the bottom underneath each dome, that was one of the things I had said I use those for. And so I thought, God, this is always in my face anyway. If I can do that over here, that would allow me to eliminate those things from my main screen. I could just turn my head to the left or turn my eyeballs and I could see everything and whether we're correlated or not, and if anything's got high momentum that I'm not noticing. And so, for example, watch what happens, right now this is on 5 minutes, which is showing me the edges and the ledges real clearly, which is what I want to see now. But, let's say I was scalping and I was just looking for momentum. I've got them on 1 minute now. And just give them a minute to all repopulate there. Okay, so again, on a bar-by-bar delta basis and on just pure, bar-by-bar equivolume basis, if you scan across this and, and if you have it set fast like this, am I exaggerating, or is it really easy to see if there's any sudden momentum anywhere? I mean, it's really pretty obvious, right? I'm not saying these are 1 minute tradable setups, but if I just looked over there, I could see, okay, well, there's an edge right there that we just tested, and here we're just smack dab in the middle of the range, and here we tested another edge, and it looks like it held. And yep, that's what that was. And here we're smack dab in the middle of nothing, and same story there and same story there. So literally in that instant, I can get a real clear picture of the context of every market I trade and understand if I'm at an edge or a ledge, or if I'm in the middle, and if I'm at, the open 5B or, the first hour high or low, this is perfect for that. And I can see if at those inflection points I'm getting any significant delta. And that's it. And then the last one hasn't changed, but I'll explain the difference. Notice how this one is elongated. I realized these used to be the same size. And I realized, well, to see that price action, whether it's on 1 minute or 5 minutes, if I just made that one longer and I made these a little bit shorter, because, I can see everything I want to see in these, if I do that, or if I just blow them up, I can see the price levels real clearly and what the order flow was there. So I just literally made them a little smaller, made these a little bigger, and it was a very significant difference. I practiced how long it took me, and this is how I measure stuff like this. I said, okay, how fast, I'll get a friend on the phone. I'll say, okay, I'm going to describe to you right now, verbally, over the phone, what the markets are all doing, each market. And I tried to see how fast I could do it with this stretched out versus the way I had it before, and I could do it in about half the time. So that's significant, right? So that's what I mean when I say I test things like my eyeball movements and optimization of every element on my screen. Something as simple as getting more vertical space that elongates the low volume nodes and elongates the high volume nodes. That made enough of a difference visually. And I'll show you the difference. So when it was this height, look at how much harder that is to read. Okay, you can still see it, but particularly if you're me and you're 60, you gotta look at that and squint, right? But just making that difference, it just gave me a lot more room to see what I was seeing. And all of a sudden I said, okay, that's a pretty good size low volume node there. And we left that really aggressively. So if I went and say, let's look at 2 minutes. And so what I did was I consolidated the function I had with all of my LRC charts on the main screens. I consolidated that down to 2 of them, which are the 2 on the right there on my main screen. And then everything else was replaced by these guys right here stretched out. Okay? So in the process, that allowed me to eliminate 7 charts and go back to just using 2 simple footprints, which is always what I wanted. I just want to see the deltas. I just want to see the places we're leaning on, the inflection points we're leaning on, and are we getting bought or sold? Like here was an attempt to get bought. We obviously had some stops get hit up there, and and then it got sold really aggressively, and we're back into balance. And that's the kind of stuff that I use a footprint for. And I want to see the delta while that's happening. And 5 minutes may not be the right setting depending on the trade setup I'm looking at. So, remember, the price action leads me here first, not the other way around. I don't look for the setup here. I see the setup and the price action, and I go here to get more information about it. So you can see 2 minutes here is actually really, or excuse me, 3 minutes is really illustrative, because you can see buying pushed us up, and then we sprung up again with more buying, and then there was a lot of buyers up here, but then there were some sellers, and then we had some more buying that was immediately sold, and then we had some, that indicator there is from price rejector. If I turn it off, you can pretty much see the same story though. So I'll turn off the proprietary stuff of Lee's here we'll end that commercial for just a minute. Hang on, let's see. Make sure I've got the right ones off. Yeah, okay, so, oops, I turned off the number bars too, sorry. I didn't want to do that. Okay, so anyway, that's what it looks like without those studies on it. And you can kind of see the same thing. It's just not quite as visual, which is, as we have said to you over and over again, that's what a good tool does. A good tool helps you visualize better. And if it helps you do that enough that it's worth its cost, then that's a tool you should have. All right, so we're done with that. We're done with this context. So back on the main screen, you can see how and why I simplified to this. Any 2 markets I'm trading, let's say I'm trading video game in the NQ and I'm trading structure in the ES, I can do that. If we're more volatile, like we've been the last few minutes, I can switch out to maybe 30 seconds. And all I'm trying to do by changing that is get a sense of what the current range is. So as long as the price action fits within the ranges that I've established, then I'm looking at the right snapshot. If it's too fast, it will be too wide. So for example, if I make this 10 seconds, you'll see it's just all over the place. I mean, a range from here to here is just too fast. I'm not seeing any ebb and flow in there. So and if I make it too big the other way, it will be like reading any chart. It'll look way too obvious. Like, oh yeah, well obviously that was a long down there, but unfortunately with 45 seconds, was it on this wick or was it here? That's too slow. So you kind of have to tune it for the time of day to the right time frame, but that should work for whatever markets you're trading. And you can see there, that answered that question right there by going to 20 seconds. It was a perfect turn, but if you were on 45 seconds or anything longer than that, you would have missed it. So, and again, you're looking for that bar by bar delta to change. That's the trigger. And on 15 seconds, that's probably really obvious for that particular event. Yeah, there it is right there. And it occurred right on the LRC boundary. So when you have the interval set right, that's the kind of turns you'll see. You'll see it turning on the LRC. And why? Well, remember, the LRC should capture 96% of the action in the range. So that's exactly how it should behave. And so that gives you your edge. Okay, I'm going to stop here. Yes, we're going to take a break. Yes, there's going to be time for more questions and any questions you might have. Something keeps beeping at me. I'm not sure what it is. So anyway, so remember, I started this discussion with what is it that I do? And I do scalping based on video game, which is NQ. And in that case, I'm just trading inflection points in the range, like this one. And the other thing I do is I trade ES more structurally when I scalp it. So I'd be looking to fade up here, or maybe, trade this edge or this edge down here. So for that, I still want to see the price action, and that's usually enough. But having the fast footprint, this is a duplicate of the one on the other screen, but just slightly quicker, can give me an edge. It doesn't work at all for me in NQ, but here in ES, it can be very useful because, again, it's showing me what's happening as the market's turning, and that helps me game the dome action a little bit better. I'm pretty good at seeing that on the dome, but I've been practicing for a while. And also, footprints are relatively new to me. Remember, I had them in 2017. I got rid of them because the ones in Ninja 7 weren't really workable. When I got Ninja 8 in 2018, I went back to them. I, beat myself over the head with a mallet with NT and footprints for 6 months, and Lee's patience, and we both gave up, and here's Sierra, and it's doing exactly what I need. And that's all I use that for. There's nothing else. I'm not looking at unfinished business. I'm not looking at imbalances, none of that stuff. And again, I've got Lee's emoji stuff on there, but if it's not there, it's pretty clear what we're looking for. Okay, so that's what it looks like when it's just virginal. And again, I'm looking to see the turns and the aggression and these are just delta footprints. This is just the standard numbers bars, just showing the delta at each price point. So anyway, and then the last thing is I occasionally look at liquidity. We just did a whole session on this a couple of days ago, and I either want to see the MES if I'm scalping, or I want to see the big picture with the ES. There's some big liquidity right under us, right there in that one. And if I'm scalping NQ, I want to see that one. Only I crunch it together like I explained in that session. I want to see way far away where the thighs is and where I can lean. So like in this example, 700 is where I would be looking. So, I might be putting some shorts up there, and longs, God, would be way down at what's that? 84. And so, so that's giving me that form of context. So, maybe down here. And so that's how I would play the video game. So you can see now I have everything I need to do the stuff I do, whether it's video game scalping, whether it is structural scalping, or whether it is structural trades that are longer term, the intraday structural trades around unfinished business or what have you. And the only piece I haven't explained yet is the stuff we traditionally think about when we talk about context, and that's what we'll do next, and that's all this stuff that I had up a minute ago. But before we do all that, I'm going to pause for questions about anything we've done so far. We will take a short break if anybody needs to after questions. So we'll come back to this stuff here in just a minute. This is the traditional context, like internals and what's up, what's down, and whatnot. But before we do that, I'm going to pause for all the questions. Okay, so wow, there's a lot of stuff going on here in the chat. So Lee, feel free to jump in on anything too if I missed anything, or if anything you want to expand on that I said. All right, let's see. Lots of good feedback for David, and that's not just directed at you, David. That's directed at anybody that's not focused. So let's see. Okay, I'm still reading. Give me another second. I read fast, but not instantly. Okay, funks and process. Yes. So great comment, Amy. And so what I did was, the way I got out of my funk is I went back and I just questioned every assumption that I had, and I got rid of so much stuff. I mean, just looking at the list of the windows I have in Ninja, it's so much smaller. This list used to go all the way to the top of my screen. The number of charts and windows is a fraction, and there's nothing confusing. Oh, and that's the other thing I meant to mention at the beginning. There's two ways that I know that I'm in a funk. Number one, my results are bad. And now Amy and everybody else, David, listen really carefully to the second thing. I forgot to mention it earlier when I was interrupted. The second thing is, it just doesn't feel right. And what was happening to me was I had too much stuff to look at, and I hate that. It was like, God, I think there's a long here, but wait a minute, the tick is up and the internals are way too strong. Advanced decline is 2000, and I'm looking over here at this footprint, which I haven't really understood quite how to lay out Sierra so that it tells me what I want to see. And so I'm seeing stuff, but it's not really clear and fast enough in my mind. And when I am thinking like that, the way I just described, that's when I know I'm in a funk. Because it's like, okay, your results suck and you're not just seeing it. When I'm doing those things, like, when we do a live session and, I just say, okay, oh, there's a long boom and, let's get 3 ticks and boom. When I'm doing that, I know I'm not in a funk, or at least not in that moment I'm not. But I want to be able to do that anytime. You guys have heard me say over and over again that this thing is running all the time. And in this house that I'm in right now has a cool combination. It's not like where I was before, where I literally had most of my trading stuff in the room I slept in. And that was just convenient, even though that was a big house with lots of other rooms. In this one, there's a study off the master bedroom. So I can see it but it's also separate, and I can close the door if I want. And so, yes, I do that. And a lot of times I'll get up in the middle of the night to go pee or whatever, or go get a drink of water, and I'll say, oh, wow, look, there's a momentum set up, and I'll sit down and I'll grab it. But if I can't do that quickly and clearly, then stuff has to go. That, Jonathan, is when I know that I've got too much stuff. Because one of the things I've learned over and over again coaching other people is that everybody always has too much stuff. And God bless her, this woman I coached in 2017, one day I said, all right, I want you to outline your process for me and put it in an Excel spreadsheet. Just tell me each decision element, like I just did for you guys. Each chart, what you look at that chart for, or the dome, or the liquidity map, or whatever it is, each element and what you're going to do with that element. She sent me a 7-page Excel workbook. It had 240 lines of entries in it, right? Explaining her process. And I didn't even read it. I said, you're crazy. She said, no, that's my process. There's no way a human being, let alone a computer. I mean, I could write that, I could code that thing up, and a computer couldn't make a decision based on all those variables. But there's no way as a human you can. And that's what I mean when I say delusions of grandeur. A lot of people they just way overestimate their abilities. And so that's why I'm saying what I'm saying to you, David, over and over again, and everybody else, that the key to this game is to get one thing right, like Amy, really well, and just be a friggin' expert at that one thing. And then you're still going to have funks around that thing. The Open 5 doesn't work every day. And if that's your bubba, you got to learn to figure out the days it's not working. That's a really good example. Like was today one? Let's look at 30 seconds, and let's look at the Open 5. Was today a good Open 5? Well, here's 30 seconds. And I would submit to you that this was a really crappy Open 5, because it wasn't till 4 minutes in that we got any movement, and it wasn't very much. And that was, there was some conversation in the Slack about how crappy the overnight was and the Open was. And so today there really wasn't a very good Open 5, not an ES. NQ was a little more energetic. It had a decent long, but not like NQ. They're usually much better than that, for example. So there you go. Don't let that make you into, don't let that create a funk for you. All right, so let's go back to the questions, and then I want to go to traditional context, like the bonds and the other indexes and correlation and all that stuff. So to do that, I'm going to drag this guy over here, and we'll get to that. Okay. So let's go back to the questions. Is everybody on board up until this point? Is everybody following the idea here, and what internal to you means and what external to you means, but that can influence price? And is anybody confused or have any questions? Lee, is there anything you want to chime in with at this point?
At some point, Jeff, it might be neat to share my screen, because where you are on your vertical display is pretty similar to how I run my main equity screen. So
okay, cool. Let's do that. Yes. Well, that's good to hear. That's always encouraging. Tell you what, let me do the rest of the conventional the conventional context, and then you can maybe grab the share and show your stuff. And so anyway, guys, so when I talk about the market internals, I'm typically talking about a couple of things. One of the things we look at is the advanced decline, and I'll just blow this guy up here so you guys, this is just, I look at the advanced decline over a period of days, and I look at it for the NASDAQ and for the S&P 500. And I also look at the tick. And this is just a way of seeing if the market's really one-sided or not. And what we've had is a move up that didn't have a lot of energy behind it. And the tick's been strong for all the last few days. And by the way, when you see 3, 4, 5 days like this in a row, it's set up for a big down day. That's very typical, and that's why I look at it. But will I go into the market with that piece of context, that external piece of context that we've been up for a bunch of days in a row, and will I trade that short because of that? And the answer is no, of course not, because it's not a short edge. It won't do anything to help me make a good decision. But it will be in the back of my mind that if there's sudden explosive downside action, I probably want to go with it because it's consistent with the thesis that we've had too much buying. Some people would say it's overbought, or some people would say, if you use the 3-day cycle model of the market, which has been around since 1901, this is a very common thing. Every 3 or 4 days, we cycle very much the other way. The buy day, sell day model. So anyway, there's a lot more about that on the web if you're interested. So that's one simple example. Another simple example is to just look at the breadth. Besides the advanced decline, what's up and what's down? Because if a certain sector is the only thing down, that again is telling in terms of context. Because let's say you're trading the YM, which is only 30 stocks, right? Here's the YM. And let's say all of the techs for some reason were down. Maybe it was something Trump did or whatever. And that's not true today. But, that would have a market effect on the YM. But if that started to change, but whatever was bringing those techs down, you could see a really radical move in the YM just from that, because it's so few elements. There's only 30 to start with. Likewise, sometimes with earnings, like, you might have Procter & Gamble or Caterpillar or Disney or whoever have earnings, or Home Depot, and that really doesn't reflect the greater market, but because it was so significant, maybe that one element is down, 5% or whatever, and it's pulling the index down. So you can use that again as a contextual reference to understand the price action that you're seeing. Is it an edge in a trade? No. But as external context, as external bias, it can put something in your brain that might be helpful later on in the day. Just having that back there. And that could be true of the other indexes, like, what's going on with the S&P 500 versus the NASDAQ versus the Russell. That's one way to look at it. Another way to look at it is to look at correlation. You've heard me say that a bunch of times. Today it's correlated in the sense that everybody's up, but the NASDAQ is kind of the strongest one, and if the RTY is also strong, that is correlated, but today it's really not that. It's a messy, sloppy day up with no energy and really low volume. And so, that right there should tell you the same story we're seeing over here with internals and with the heat map, what's up, what's down. There's really nothing going on here that should give you any trading edge. Okay. I look at gaps, this particular view here is a 5-minute view with I've shared this is a custom indicator on the bottom that's just a 5-minute trend indicator, the random walk index. I coded part of it. I still use it for that. I don't trade off of it, but are we trending up or down, and where are the gap traders? When we come down and we fill half a gap like we did today in the ES, and then we leave that, there are people that trade that strategy, and I know that. So, again, just seeing that, it gives me a little context. Okay, I could see some of those gap guys come in and buy here. It's also the POC, so those guys might buy, but again, would I trade off that? No. But what I might do is I might say, all right, if I'm short, from this move down, I'm going to go ahead and take profits because, I just don't want to be on the other side of those gap trader guys, So again, it's context. It's external to the price action, but it could affect it, and it could affect my trading decisions. Okay? And then the last thing on this screen is, this is an old, price ribbon moving average study that I used to use when I used Thinkorswim. And again, it's contextual for me because I know there's a lot of moving average traders, particularly in the NQ. So if I'm thinking about, for example, a structural short in the NQ, at the edge of a range, I'm video game trading the NQ, thinking that the range is expired or exhausted, and I'll glance over at this view and I'll say, well, you know what? The moving average guys haven't given up yet, have they? If they were in this, if they were trading this, they're still going to be long. So, I might, that again, would I not take the trade because of that? Maybe, maybe not, but it'll put in the back of my brain another little piece of information that could be useful. Now, when you're new, this might be all too much. And that's the danger of having more stuff. That's why, Jonathan and everyone else, you always want to get rid of anything that you can't use the way I just described. Explain it to somebody like they're a 3-year-old. If you can't do that, then get rid of it. You're not using it. You think you are, but you're not. And the other thing I have on this screen that I haven't mentioned is just the VIX. And that's just for, risk on, risk off. And right now it's risk on again. The VIX is going down. It's that simple. And I trade the VIX sometimes. I trade the VIX futures, so that's the other reason I have that. All right, so that's the external context stuff. And one of the things I don't use, but a lot of traders do use, are the currencies and the bonds. And I know Lee spends a little more time looking at that than I do, so that might be a good one for you to jump in on, Lee.
Oh, a little more time. I spend 15 seconds going, oh, is ZB opposed to the equities or not? That's the extent of it.
Oh. Okay, but that's a good, again, that's just kind of a filter, in your head to say, are things working the way they are normal? Or if they're not, if it's not normal, for example, let's say the market's going up real strongly, but the advanced decline is negative and it's not improving. And there's just, there's just no energy in that price up move. That's the kind of thing that alerts me to a flip setup. And you guys have heard me say, possible flip. I watch the internals very closely when I'm doing a flip trade because the internals are often a sign that you do in fact or you don't in fact have that flip over setup. Because in a flip trade, what will happen is you'll have a very strong move overnight and that move will immediately start to fade once we open. Not always right at the open, but certainly in the first hour typically. And so if you're watching that and, we're up 500 points, but, the advanced decline is even. And that happens sometimes. Then, one of those two things has to reconcile. Those are mutually exclusive over time. So unless one of those changes, the universe is broken and it has to. So either the advanced decline will come up or the price will come down. So that's the kind of thing. Again, it's not a tradable edge in this day and age of order flow. It was 10 years ago. A lot of the stuff in John Carter's books are about that. And that stuff used to be a tradable system. Now it's a filter of context. Okay, so that's the broad strokes of things for this session. What you should be able to do with respect to context and respect to staying out of funks, or if you're in a funk, you should really have a clear understanding of what it is you do with everything that's on your screen. If you can't explain it to your wife or your 4-year-old or your girlfriend or somebody that has no idea what it is that you do, then it needs to go away. Like, an example for me would be, okay, what do I do with power meters? Down here on the bottom, and I'll tell you exactly what I do with them. I have 2 settings on every one of them, and all of them are the same. They're showing me all the trades, not the filtered trades, but all of the trades for 30 seconds and for 5 minutes or 300 seconds, same thing. And so I can see a 5-minute delta bias by which side that's on, because it's the delta, basically. And I can see a very immediate 30-second delta. It's kind of like a instantaneous cumulative delta, right? And so, let's say I get up to go get coffee and I come back and the market's really strongly moving, and I see, well, it's really strongly moving right now, but it hasn't affected the 5-minute delta at all. It's perfectly balanced. Then I'll say, all right, we had some sort of event that's over. On the other hand, if I'm looking at that and, it's 500 to 500, and then all of a sudden it's 500, now it's 500 to 800, now it's 800 to 300, and now it's 900 to 200. And, it's clearly one-sided on both of those, or trending. Then I'll say to myself, okay, there's definitely a bias, in the momentum right now. So that will alert me to, my favorite momentum scalps, high volume reversals and just, HMOMO plays in general. So that's how I use those. That's all I do with those, and that's very important to my scalping ability to be able to see that. That way, if I don't have focus for a couple of minutes, whether I'm away from my desk or I'm on the phone, or I'm just my mind's drifting, or I'm on Slack, that immediately alerts me to what has happened recently. Same thing with the tapes, the blocks on the tapes. It shows me what price levels were inflection points and how aggressively they got bought or sold. And recently, I've fooled around with how many lines of this to have, and the ones you're seeing right now are optimal. That for this screen size and what I do, this is an optimal amount of those, and that's an optimal size for my power meters. And I don't need those LRC charts at the bottom anymore. 2 is plenty. If I'm in a gold trade or an oil trade, NES, that I can do that. If I'm in, scalping NQ and trading the ES structurally, I can do that. And, I just went back and looked, and it's almost never that I'm in more than 2 instruments at once. But I'm in 2 at once a lot. So I decided 2 charts was perfect, and being able to see liquidity on whatever it is I'm trading. So, right now that's MES, but if I want gold liquidity, or oil, I just opened up oil up there. So let's say I want to look at an oil momentum trade. It's moving down pretty strongly here. I can bring up the oil liquidity, and I've got everything I need right there, and here's the oil dome right over there, and that's it. If I wanted to see a footprint, yeah, I can do that too. I've got that set up in Sierra. Although for that type of trade, I probably wouldn't do that, but that's also real easy to do quickly. I've got them all linked. Anyway, so I've got something covering it right now. Otherwise, I'd show you that. So let's see. I can show you that for gold. That's that's easier. I can see that one out of the corner of my eye. So anyway, what I just did there was I just changed that guy to gold. So let's say I was doing a gold trade here. That example works together, and then I could see the footprint for gold. So everything I need to see is always right here for ES, which I never change, and then whatever instrument I'm focused on. In addition to that, whether it's gold, oil, NQ, whatever. Okay, so let me put this back, and then I will take whatever questions or comments anybody has, and we'll go from there. I've got to write myself a quick note here, so hang on. Okay. All right, let's get back to you too as well, Tom. I see it's a beautiful day in Chicago. Wow, that's rare up there, so go enjoy that. All right, so let's see. I'm going back and reading the comments, and okay. So Jonathan says, I just mentioned something he thinks is important, that you're not in a funk at least at that time. Would you agree that funks can happen at any time, and even for very short durations? Oh, absolutely. Particularly for people that have the kind of brains that we typically do, traders typically do. Which is, we either are, Asperger's-y, or we're, OCD, or, whatever. Pick your diagnosis. Manic depressive, a lot of traders are bipolar. So absolutely, I believe that's true. For me, it can be as simple as, look, I wake up in pain every single day. And some days I have the mental fortitude to battle my way to the coffee and get moving and go for a walk and make it to my desk. Some days I don't. And a lot of times, I have to really evaluate for me why I'm either of those things. Is it just I'm being a wimp, or is it truly a good day just to rest? I mean, if I just spent a week moving and filling a minivan with boxes of computers and stuff like that, which I did a month ago, I was hard on myself, but I realized, I should be in a funk. I've been doing nothing but physical work for a while here, and that's not something, that is something I do regularly anymore. I'm in pretty good shape, but that's different. Moving is very specific muscles. So yeah, I think sometimes it's something as simple as what I explained with my friends. I'd be in the groove in a good trade. That happened in May. I had a good trade on. It was up about $5,000. This was an oil trade that I was in with some size. And I put a trail under it, but it was pretty volatile, and I wanted to give it some room. And the drama started between my two friends, and I had to go get Enzo, who was the little Maltese. I've shown you guys pictures of him before. He's Bentley's dog, and he sometimes would get in the middle of their arguments, and I would just go get him so that he wouldn't have to hear them screaming at each other, and I would take him to the dog park or whatever, or go run errands with him in the car with him as co-pilot. You've seen those pictures. So so that something like that would happen, and I would just think, all right, I'll take profits here, and and I'll go take Enzo to the dog park or whatever, just to diffuse it. And one time I did that, and it ended up, I still made some money, but because I had to leave it that way, the opportunity cost was 5 digits. And then another time I actually had to close out a winning trade because I couldn't manage it. There was no way to leave a stop under it or anything. And so, I took a really good setup that was profitable, and I had to close it out at a loss. And so it was the stuff that was going on created an internal funk for me because I was resentful. I was pissed off. And plus, we were doing stuff, that was in the middle of the lockdown, which, made it hard by itself as well. And, so imagine all that on any given day. I wake up and I can't move physically, and I'm just like, fuck it today. I'm just not going to deal with it. And so it's very easy to have a funk take over your life. And so for me with trading, I'll take a break for a couple of days. I won't trade at all. I won't trade in the sim. And then what I'll do is I'll go back and I'll just really investigate my process like I just went through with you guys. And I'll just say, all right, if I was starting from scratch right now and explaining this to my 4-year-old or to, Alice the Aussie Doodle, the smartest dog I know, who's pretty smart, she'd get most of it. If I was doing that, what elements don't I need? And I was really excited for where I ended up with what I'm showing you right now. It's vastly simpler, and there's fewer shiny objects on the screen to distract me. And since I've used this, which is a couple of days now since I made this change, I've had no loser trades at all. I mean, I won't exaggerate. I have not made a mistake since I made this change. Whereas for the 5 weeks prior, I would do my typical. I posted one day I made $1,000 scalping in half an hour, and I was doing stuff like that. But then I'd have $20 or $30 losers, 40 of them in a row, just making the same little stupid mistake because I was distracted by stuff on my screen that I really don't want to look at. So here we are. All right. Good. So good question. Good comment, Jonathan. Good comment back at that, Amy, about adapting. Totally. Adapt, improvise, overcome. You've heard me say that so many times. Today was a really hard Open 5, Jonathan. The Open 5 has been hard for 2 weeks, everybody. I keep saying this, but nobody's listening. The market is not behaving normally because there's too much uncertainty. At any given moment, we could have stimulus and be at 3,800, or we could have Trump get a what is it, a amendment, 25th Amendment, and have him get locked up in the loony bin. We don't know what's going to happen. It's just too crazy. And, the markets don't like that. I'm surprised the VIX isn't higher. People are not buying insurance, which is fascinating. But, it is what it is. Where the heck is my VIX? There it is. Again, I don't always try to figure out why. It's just, obviously it's people aren't taking a lot of risk. Aren't concerned about risk right now. I posted this earlier in surfing that I'll share with you guys along the same lines. Check this out. So, I post this every now and then, the fear and greed index from CNN, and right now it's neutral. It's right in the middle. That suggests we have a ton of upside to go, if this market calms down at all. And so, that's one of the things I'm concerned about with my triple ETFs, which, as you know, if you followed that conversation, are triple bear. I could get caught on the wrong side of a really big stimulus move. So I'm being very careful to not have that happen to me. Anyway, so those are all context. So all of those things are external context that can have a direct influence on the price, but don't influence how I would trade the price if that thing doesn't happen. So that's how I define external. They can influence the market. They could certainly influence the price. But until they do that, until something happens, they're certainly not components of an edge. So that's the other half. That's the external context. And the internal is anything that affects you, your peace of mind, your ability to quickly make good discretionary decisions, etc. Internal. And that is the meat of my presentation about context, understanding all of the other things that can impact your trading world and how you can kind of categorize and manage them to the extent that it's possible to do that. Questions, comments? All right, let's see. Enjoy, Tom, I already covered that. Let's see. Rapid cycling funk. Yeah, that one happens with me a lot. David says, funks end up being the resolve you need to simplify further. Oh, absolutely. How many times did you guys hear me say in the workshop in 2019, guys, how many times did you guys hear me say the following? That any day I have a loser, I use the anger from that loser to go back and question all of my assumptions and simplify my system, right? I do that a lot. Yes, the comments about the toss map lagging are true. Okay, that's not anything. All right, so I'm just reading through the comments. Yeah. Oh, in life, David, the best results come from conflict and pain, whether it's in trading or your process. That's just true in life. The best relationships you will be in with men, women, marriages, friends, whatever, will come as a result of the ones that you failed at and what you learned from those. Absolutely true. Could I please state my Jigsaw power meter settings? Absolutely, I could do that. They're all the same except for ES. So we'll do ES first, okay? They're always set on, the power meters are the same for everybody. They're set at 30 for the fast one, the short one, and 300 for the other one. All trades in all cases. And my settings for the tapes, I filter 20 or more, and I filter on ES and 10 or more on everything else. But I see the power meters for all trades, not for my filter settings. Good question. Happy to answer that one. Okay, let's see. Yeah, context is really tricky, particularly someone like you, Maria, that you have so many things going on, in life with kids and, running a household and all of your businesses. And yeah, that's why I put in place really specific ways of measuring a funk. I mean, at the end of every day, when I sit down and jot down notes in my little handwritten journal, if at all, if I have any notes, I don't do it every day, but when I do, I told you guys I have a little handwritten journal and I've kept every one of them. I have a crate of them in my closet, and I'll jot down in there, just not feeling it today. Looking around at my elements on my screen and feeling confused, not feeling like I had an edge. And, whenever that happens, then I look at the external stuff. Well, shit, Jeff, you just moved. You're on a bigger monitor. You're in a new house. There's a fire burning 10 miles away that you might have to evacuate on 5 minutes notice. So, all right, maybe, that's all important stuff, and so I think if either of those two boxes get checked, that the metrics are bad, or it just doesn't feel like I'm seeing my pieces the way I do when it's working, then I immediately say, okay, I've got a funk, and I back off in size, or I go to SIM, and I start questioning my assumptions. I don't start ripping stuff out of my setups that day. That's a mistake I used to make. Don't change everything after you have a losing day. But I'll wait till the next morning, and then I'll go back and say, okay, how did this thing on my context screen over here, how did that 1 minute chart help me or confuse me? And, and how did that footprint help me or confuse me? So I hope all that makes sense. The power meters are measuring delta. What the power meters measure, yes, is for, and if you want to see a formal explanation of it, there's a good one on the Day Trader help screen, which I put up this link all the time, because even just learning about tape reading, this is a good link to have saved. I just have to find it. There it is. So this is basically the help screen for Day Trader. I'll put it in the chat too. And if you go to the reconstructed tapes, and that's what I'm running the power meters off of, you can see how all that works and what it's showing you. So yeah, it's the delta of the cumulative trades on the recon tape and whether I filtered them or not. Okay. And there's a lot of other good stuff in here. Like, in the reconstructed tapes, you see, like, I've got, like, whether it's at the bid or the ask, and these are all different colors. And if it's like below, it'll highlight that. You can see there's one of those right there. And when there's a big sweep, it'll even do a different color for that. So those colors are all there. I use the defaults for those guys. And the defaults, the kind of palette is that everything pink, purple, or red is downside, and blue, green, or variations of that, cyan and whatnot, those are to the upside, and that's all I need. And I've learned to just, like, when I see that, it catches my eye, and that's all I need to know is that, okay, that's a bearish event right there, and that was at 66.75, but we're right above that, so that might have been just one guy, or he's trapped. And that's exactly, and there's another one right there, so that could have been the two sides of one trade. Who knows, So, but I like to see those go by, and again, the filters were based on, as long as this is moving by slow enough that I can read it, I've got the right size. If you make it too small, it's just noisy. Like, if you made this, 5 in the micros or whatever, it's just going to go by so fast, it's not going to tell you anything. So that's an example. And that's why I use those two. So yeah, see that right there, that's just not saying anything to me. But if I put that up to 10, and again, I use 10 for everything but the ES, which I use 20 for, then, it takes 10 or more to move the price here, and at least, and the same thing here, and for all the others. And that's what I'm looking for when I do that. So you can see, like, there's pretty strong buy here in gold. And, these are all at the bid or above it. And there's some pretty good sized blocks. That's the full size gold contract, 42, 30, that's some decent buying. And so we could say, wow, let's go look at that, real quick. Maybe we want to be scalping gold. And so that's how quick I can get that information. And to me, that's perfect. I can see, all right, so that's the buying right there that we just saw, and it's over. We're in ebb and flow. So that buying I saw on the tape back there is done. So getting rid of that down here and being able to just go have a look at it and keep my screen that much cleaner and getting that much more vertical space turned out to be a great trade-off, and that's why I did it. Okay, good questions. Other questions, comments? Is this stuff helpful? You guys learning anything? Super, good. Who's not learning anything? Who's here going, well, this is garbage. I wasted my time for the last 2 hours here. Is that anybody? I mean, you can be honest. If you're not getting it, maybe I can try to steer you onto the right track. But we had over and over again, over and over, in every session we do, I say, well, what's my context right now? And I just showed you all the things. So if I was to summarize it right now, let's go through and do that. So if I were summarizing the context right now, what do I want to know? Well, I want to start with the price action. I always start with the fastest, and then I work my way out because I'm a scalper. So I'll just say, all right, what's going on? Ebb and flow and nothing. We're above the first hour high, which is bullish, but we're not doing anything up there. And if you take a look at the volume profile, we've got a double D and we're at the top D, so there's some potential to fall through here. Okay, so now I understand my structure and I understand the price action. The liquidity isn't really adding anything to that picture, but we could look at it real quickly. And basically there's a bid under the market, which supports the thesis of what I just said. There's liquidity down here right under us. Okay, so that all goes together. The NQ is pretty much just dancing around the same thing above the first hour high. So that's that. And then I'd go look at the internals and I'd say, okay, what's going on there? Well, God, nothing. I mean, we're almost perfectly balanced. We're just above zero on the S&P, and the NASDAQ is strong. You know, what else is new? That's been going on for a while. Other than that, nothing to see here. So, you know, we already looked at the heat map. There's nothing to see there still. It supports everything we've just finished saying. So basically, you know, there's just nothing to see in any other than, you know, what we talked about so far. And if I look over on my context screens, you know, we're right in the middle of the double D top. We're in the middle of the range at the top of the NQ. YM is the middle of the middle, as is RTY. Oil, wow, oil took a turn. It was at the top of the range. Now it's at the bottom and it's threatening to break down back into the 30s. That's worth keeping an eye on, although at this time of the day, that's unlikely. And then gold has had a really strong day up, two of them actually. And now it's trying to consolidate back up here in the low 1900s, where if you recall, it consolidated a while ago. And that's why we have this guy. We can see, oh, look at that. We're right back at a previous area of consolidation that we went below and are coming back up to test. So that's also a piece of context we would want to know. In the 30-minute structural world, you know, we already looked at that. These are 15-minute bars, but on 30 minutes, the picture isn't really much different. There's basically today, you know, there's an upside bias. And with this double D, and nothing's happening beyond that. It's, you know, it's literally that straightforward. You know, high volume node, low volume in the middle, and you know, other than that, there's really nothing to add to it. So that's it. That's our context. You know everything you could possibly want to know. And if there's a trade set up, take it. There isn't one, so go do something else. That's it. Good. Good, David. We have to constantly bring you back down to earth and reel you back in. Okay, so hour and a half is coming up here, and I'm pretty tired, so I'm going to start asking for burning desires. And I'm going to just add two other comments. I've started as a way of disciplining my first entry in the micros. You know, as you've noticed before, I take sometimes a flyer on my first one lot. I've changed my minimum quantity of micros to 5. So it's a half an ES or it's nothing. So that has prevented me from just taking some, oh yeah, let's go ahead and just jump in here. And I've gotten my execution in this choppy environment's gotten much better by doing that. So I'm basically sizing myself down, but forcing myself to have a minimum acceptable size that I think is worth doing, or I'm not taking a trade. Okay, so that's something that I added that I haven't mentioned to you guys yet. And you know, I may take that off later, but that's something I'm doing right now. And that's that. Questions, comments? Yeah, Amy, I've done that with 2 before, and I moved it up to 5 because I have this habit of with the micros where I'll just say, oh, what the heck, it's only a micro, you know, and I'll put one on, and I got to stop doing that because, you know, I'm reading the action right, but I'm being impatient, and if I just settle down and wait, I'll get a better entry with my 5 lot. So I'm just waiting. That's what I'm doing. And yeah, it does. It's better practice to be more disciplined. And I also took out my, if you guys remember my old, you know, scalp or weight card that, you know, one side it says scalp and the other side it says weight for structure. I brought that back out and I'm putting that on my keyboard again. That's what I do. So that way I either focus on scalp trades or structure trades. Or if I'm doing both, it's a way of physically reminding myself that that's what I'm doing. So anyway. All right. Is there still time to get a quick view of the screen Lee mentioned? Yeah, Lee, do you want to share your screen? Can you do that?
Yeah, sure. Give me one sec.
Take the porn down. Take down Pornhub and
Yeah, but you're not looking so great on it, Jeff. That's the thing.
My hair's growing back since I
Hang
shaved
on,
my head. So at least I have
yeah,
hair.
but in the wrong place.
Yeah, well, only you
Right,
Brits,
here we
the Brits are always, really prim and proper with the
yeah,
garbage can humor. All
yeah,
right, you got your screen.
it's
Did you get?
still
Yeah,
grey. Here we go.
you got the screen.
Okay,
You got the.
so
All right, good.
I think so. I think you can see it. So this is still not
Yeah,
perfect for me. I've still got some clutter I want to clear out, but this is very similar to what you're doing on your vertical screen, Jeff, where I'm running domes effectively, but I've got a little bit of fast chart on each of the domes with the delta profile, and then here's my focus on the structure for ES. So I've got the remnants of the structure here, just the inflection points on each of the other indices up here, purely to see are they heading somewhere where we might get a reaction. But your left-hand screen is very reminiscent of what I'm doing now. The other things we were talking about, intermarket correlation, stuff like that, what I will spend a lot of time looking at during the day, I use an emoji tool to highlight unfinished business. It's the orange line on any of these charts. And during the day, while ES is the primary thing I'm trading, I will track unfinished business at the extremes on NQ or RTY or YM, purely as a sign of potential continuation. So if I'm in something, it will get me to look more closely at what I'm in. Or if let's say I'm in a trade on ES, I'll look for opportunities of continuation trade on the other equities, which I'm not really trading, but just to see, can I get in around an inflection point or an LRC intersection, lean on the delta to trade towards the known point of the unfinished business at the session high or low. So I just used some tools. There were some examples yesterday. There's yesterday, I think. And yesterday, is that yesterday? 8th. That's yesterday, isn't it? Yeah. Yesterday's interesting. So we had that two-sided break on ES, but RTY had unfinished business at the highs. So there's another clue for me there in terms of intermarket correlation that something may well happen. So those are some of the simple ways in which I'm looking at intermarket all on one screen. Yeah, that's it. A little quick walkthrough of my space. Can you share the chart book?
well,
Oh, sorry, go on, Jeff.
I was just going to let you answer that before I went. Can you share the chart book?
Yeah, can you share the chart book? Yeah, if I must. No one's asked, so I'm going to. Lee,
Okay.
that's all you're looking at. I don't know if that's sarcastic or not. Well, Stephen's American, so it's probably not. But yeah, this is
because Americans are. I like the market. I assume those big reds are market by orders.
Quasi market by order. We'll go through this in the liquidity clinic. Yeah.
Cool.
It avoids me having the motive wave dome open as well.
Oh, yeah,
Stephen,
and then
Stephen was serious. Of course he was. Yeah, that is all I'm looking at. And there is still too much here. I want to clean this up. It's probably, at the moment I'm using LRC colors to match Jeff's red and green, and they're distracting me. So I'm going to work on some exercise of stripping this down a little bit more. But yeah, this is my view of equities, and I run a similar thing for GC and CL, just in two halves. And Anita has asked, what represents the yellow color on your footprint to the right? Do you mean the thing I'm highlighting here, Anita? In Bill Gibbon language, this would be cat pee color. It must be, no, the other one. What? This one, its volume is yellow. So volume profile is yellow, sitting behind a delta profile, just so I can see.
That's total volume. Is that what it is?
Exactly. Yeah.
Yeah.
Yeah. So total. I'm not that bothered about it. I can see it in the numbers. Here's obviously a big number. The numbers are going to be wider if there's big volume. The numbers are going to be lower if there's small volume. Do I care about the histogram? Well, the text gives me the histogram, like jigsaw. So the delta is more important to me. But yeah, to Stephen's point, this is it. I'm trying to pare down the amount of decision-making elements. It's still too much because there's still too much that can tempt you. But ultimately, I can read structure, I can see what to lean on, I can see the range, and I can see if there's anything going on in the other indices that tells me there's a sign of potential continuation. So Stephen, that's it. Bob's saying, Lee, please describe why 2 or 3 yellow marks on the chart, one to the left and why they're not connected to Pro. So what this is applying some emoji tools on the 15-second chart, but analyzing the volume within the 2 profiles. So we've got a 20 LRC period volume profile and a 80 period LRC profile. And this is emoji price projector analyzing these profiles and just marking it in areas on the 15-second chart when these profiles display the pattern. And obviously these can change when we're at the edges. So it just gives me an idea historically of where we've seen potential turnaround points looking backwards rather than looking forwards. So Bob, it might make sense as if you think about, how would we read a profile looking for patterns? I'm letting a tool do it for me now and just marking it where it's there. And Bill G has really gone to town on this. Stephen said something. So yeah, I'm trying to make my life as easy as possible with tools, but I still want to cut down the visuals. There's still a bit too much to interpret, and I have to be quite strict on going, I'm only looking at X and Y and Z. So that's it. Similar view to Jeff's through progress, not perfection, I guess.
Absolutely. One other thing I wanted to mention about, 2 things. One was that the place where I'm at, a couple people have asked me this privately, so I'm just going to share it publicly with everybody. And Lee and I have talked about this too. The place that I'm at with respect to what the optimal hardware environment would be now that I have this 38-inch monitor and I have all my other stuff. The ideal environment, Lee and I have both agreed, would be 2 of these 38s, one on top of the other. And what that would allow you to do is have a main screen like mine with the domes, and then above it have whatever structure, charts, footprints that you want. So you could see it right above each dome. And that ratio, the 38s give you perfect dot pitch size and aspect ratio. They're just perfect for trading. And so that gives you 2 perfect screens. And the trouble with the 2 on the side is, number one, you got to turn your head to look at it. You can't just raise your eyes up. And also, I'm constantly making compromises to try to fit everything on those vertical monitors. Whereas a 38 here would let me, have all of the context charts for each instrument be literally vertically above it. And I've done that in the past. I used to have a 48-inch TV above my old 32-inch monitor, if you guys remember. And I love that setup. And so the next 38-inch monitor, maybe even a 34 up there would work. I don't know. But that would be ideal for being able to see the minimum stuff, but see it all very simply and quickly consolidated. The other thing I wanted to mention was, somebody asked me this privately as well, was why did I take the LRCs off of my Sierra chart footprint? Because I wasn't using it there. It was clouding up what I see on a footprint. And yeah, it was nice having the LRCs right over the volume profile and right over Lee's edge zone stuff, but it was having me, like Lee just said, it was having me look at too many things in one place that I didn't necessarily want to see all at once. When I'm scalping, I really don't care about the footprint, and I don't really care about edge zones, which are which are imbalances. I see them on the domes. So it's nice to have that, but I don't want to have that in my face. So I took that stuff off, and my metrics immediately went right back up. So there's a lot of lessons in this that may apply to you completely differently, but the procedure that I use, the process that I use to solve that and to question that and go back and question all of my charting assumptions and my tool assumptions, I think that is a process that every trader can use. Would you agree with that, Lee? Lee? Okay, we lost Lee.
Oh, I double muted myself. You've got to keep reviewing it, and like you say, when you get into funk, it's a reason to go and explore what's there and strip out, refine, optimize, and it's a continual process.
Absolutely. All right, let's see. We covered the conversations about the monitors, and yeah, I don't recommend the 4K stuff unless you already have it. Again, Lee and I have talked about this, and we've shared about this. 4K has the wrong DPI. Really, it's if you can afford a good WQHD, it's a better choice.
Yeah, 4K, the right DPI is a 40-inch, but 40 is hard to find now. You're finding 43. And the perfect DPI at the moment is QHD on 27 and the 38-inch curved. And 4K 40-inch just feels physically too big as a panel. And what I'm thinking about playing with is stacking another horizontal 32 above the equities one. So literally I can just see, here's equities, here's CL, here's GC. But ultimately, square and 4x3 is so much more comfortable. But what I would love to see is a 38-inch, something like 5120 by 2160, which right now is only available on 34. So once again, the PPI is wrong. But yeah, watching brief on all this stuff.
Yeah, and again, it's always about progress. And if you're in a funk, figure out what's funking you up and, eliminate it. And one of the things that consistently is true for me, and this is what I will wrap the session up with this comment. And I really suggest you guys take this comment to heart, that if I'm in a funk, the examination of internal factors, whatever they might be, and external factors right away, going through that and immediately identifying, certainly by the next morning what's going on, and using my metrics, to be the first line of defense. When the numbers start going bad, cut back, step back, go to SIM, size down. Profitability is telling you something if you're not doing it. And then, but every single time I have gone back and looked at my charts and my tools and eliminated stuff, that has helped me get out of a funk, and it's improved my trading in the long run. So, and without exception, there's literally no exception to that statement. All right, and I'm going to wrap it up with that. If there are any burning desires or questions, 15-inch laptop. What you might consider, Stephen, is just get an external monitor for your laptop. That a lot of people do that. You can get a really nice external monitor. And like Lee said, a really good choice is a 27 QHD. And almost every laptop has enough power to run at least one external monitor. So, all right. Any other questions, comments? Anybody? That's burning desires going once. Can't fit it in the van. We'll get a bigger van. Build the van out better. Talk to Amy. Get in those groups on Facebook about, van life. There's amazing ways people consolidate stuff. I'm sure you're very good at it too. All right, everybody. Thank you, Lee. Thank you, everyone, for attending. I think it was a good session. I hope it was helpful for all of you. And we will see you next. Let's see, what is next? The Ides of Monday, which isn't even on the calendar yet. I will put it on right now. And then what else do we have coming up? I can't even remember. We're doing the other half of liquidity. When is that, Lee? That is Tuesday.
Yeah.
Tuesday at 9 o'clock.
No, it'll be let's understand thought processes behind this data.
I love it. Cool. All right. Until then, we'll see you guys at the Ides of Monday, 5:30 Monday morning. Odds are I'll do a Sunday reopen session as I've done in the past. Listen to me about gold when I tell you about gold on Sunday. That will be roughly 2:30, 2:45 p.m. California time, Pacific, Sunday afternoon. Until then, take care. We'll see you then.
Bye.
Bye.